Hi everyone, Lisa Haven here, and I've got a bombshell of a news report about the economy. As you know, the feds have raised the rates and they're talking about raising the rates 2 more times. So I wanted to bring on Noble Gold's president, Colin Plume, to give us the rundown on what all of that means. He's with noblegoldinvestments.com, but a lot of the things that they spoke about last year are coming to pass now, and I've brought Charles on in the past, and so I really value the knowledge and the information that they have. So, and not only that, but we see Toys R Us filing for bankruptcy or bankruptcy protection. We have a lot of grocery stores and even retailers going out of business. You have takeovers like Amazon. So lots of different things happening on the economic front. And so I thought, let's bring on an expert. So are you with me over there, Colin?
Yep, I'm right here, and I would say it feels a lot like 2008. It almost like we could be doing this interview in 2008 because the exact same things were happening. Interest rates were going up a little bit faster than they are now. Big box retailers were having problems, and you saw the metals market react in a very positive way. Gold's up almost 2%, silver's up 2.25% today based on the Fed raising interest rates. And it's amazing because it was expected. It wasn't a shock. They raised it up 1/4 point, which everybody expected, but everybody was really diving into the tangible metal market. And with 2 more interest rate hikes this year, I think it's going to be a real boom for physical investments.
Yeah, investments, but it's going to hurt the American wallet, I'm sure, especially if you're on the market, to purchase certain things. So it's terrifying, but at the same time, that's why I partner with people like you, is because you guys have the ability to prepare in advance for such things as we're going to see, which is why I encourage everybody, convert your 401ks to Roth IRAs, to gold, back it by gold, back it by Bitcoin, and you guys offer that. But with that, let's start first. We know 78% of Americans are living paycheck to paycheck. And you said, for starters, that we're looking again at another 2008, or even what happened prior to 2008. We had the whole fall. Is that something that you think we're headed into coming here soon with these Fed hikes, or what do you forecast?
Well, history always repeats itself. So when you see these rate hikes happen, you see a company like Toys R Us everybody remembers Toys R Us. They remember the jingle. It's really sad that it's going out of business. It's sad for all Americans, children. A lot of the local Toys R Us by us have just been packed with people that I think they went in to see if their sales, but also they remember their childhood and be able to buy these toys and the enjoyment. And then in terms of the people working there, 33,000 employees are going to be out of a job in the next month. So, I think it's a pretty bad situation. The Fed basically is saying we can't keep interest rates this low. That's a reaction to everything that's happening in the economy. So they're starting to creep them up a little bit here or there. And that's going to affect everybody because it affects large corporations. All large corporations are borrowing money. And so that their cost of money is going to continue to rise. And that's going to make it more difficult for them to be profitable. And so they're going to have to start laying people off and start, really downsizing, and that's going to affect the economy. So even though it was only 1/4 point that the Fed raised, it affects a lot of people. It affects people that have a variable mortgage, because your mortgage is going to go up. It's going to affect your credit card amounts because your credit cards are not fixed amounts, so those are going to go up. So you really want to be mindful of your money and what you're invested into, and also keep an eye on these things starting to creep up, because a little point here, a little point here on some of these things that you haven't paid off could be thousands of dollars. I heard that this little bump could affect the average American about $1,200 a year on their mortgage. So you want to keep your eye on these rate hikes. We could run into a 2008 debacle.
Wow, which is, again, that's why I encourage people to be ready. Just the other day, yesterday, I put out a report, and in this report, I shared how, and I'm referencing my notes here, but the Southeastern Groceries, the owner of Winn-Dixie, Buy Low Supermarket, Top Friendly Markets, these are all grocery stores, and they're shutting down portions. I know that the Top Friendly, I believe, was shutting down all 170 stores, and about 94 of the 700 stores on the Southeast Groceries. I know Kroger and even Walmart combined behind, are losing over 30 billion in funds there. I mean, and you can attribute it to systems, or you can attribute it to Amazon and the move in that direction. But either way, we're getting in a really volatile state. People are going to they are losing their jobs. Then you have the bankruptcies. Toys R Us, Best Buy, I think, just closed a lot of shops. Radio Shack. I mean, the list is like continuing on. And yeah, we have this online giant. Do you think it's just all attributed to, say, people are buying online, or is there more to the story?
Automation obviously has a big part to play in it. Amazon has a big part to play in it. But I also think just the cost of goods is continuing to go up, and that's affecting companies' bottom lines. We've been able to have a sort of a fake economy because money has been so cheap. So you see a lot of corporations, what they do is with cheap money, they just keep rebuying their own stock, which has pushed their stock prices up to all-time highs. How long that will continue, I don't know. But I do think that when people look at the economy, they look around, they see these big box retailers closing, it's going to tighten. So they're going to tighten consumer spending. People are going to, start putting some money away. And I think we're going to be in a tough run over this next year. I don't think we're going to see the kind of Christmas and Black Friday that we've seen, for the last few years. I think people are going to start just putting money aside. And when people stop spending, that's when these big corporations start getting nervous, laying people off. And it has a trickle effect to the economy. And I think with the stock market, what people are doing right now is they're starting to go, okay, I've done well. I'm at an all-time high. I got to move some money. I got to diversify some of this portfolio. I got to put some in metals or put some away in something safe, and just be careful. It's kind of like a duck and cover strategy. So I think everybody should be doing that right now if they're really looking at the economy the right way. We're way past the correction date. Every correction happens every 7 to 10 years. You can go back 2008, 2001, 1994, 1987, every 7 to 10 years. Last correction was 2008. We're in 2018. So, I don't know.
So we're definitely looking at a correction here soon. That's probably a fact,
Absolutely.
Just historically speaking. And that's the other thing. Now let's talk about gold a little bit. You sent me a report, and I'll throw that up on the screen. Fox News, a report there, but rumored sight of 55 million in Civil War era gold draws FBI's attention. Now we already know Russia is hoarding gold, stocking up on gold, and now we have this where it's drawing the attention of the FBI. Why is gold drawing their attention?
Well, the report is, and there's a number of groups that obviously all over the world that look for gold, but this group, I think the name of the group is Finders Keepers. There are a bunch of Americans that, look for gold in different places, and they basically have a tip that a shipment of gold that was sent from President Lincoln, it was supposed to go to the Union soldiers during the Battle of Gettysburg, that shipment was lost. And so they have the site of where this gold is, or where they believe this gold is. It's anywhere from 22 to 52 gold bars. So we're talking, 40 to 50 million dollars. They're not your small bars; these are large gold bars. And so they've basically quarantined an area, and they're out there looking. And I think people say gold it's not valuable, but if the FBI is there and they're looking and they're digging for gold, a gold hoard, there obviously is a tremendous value there. So whether they'll find it, I don't know, but it's definitely interesting. I mean, the pictures show that they're there, they're looking for it. So and it would be an amazing find. It's 155 years. It's been dug in the ground, and hopefully they find it. I think it would be fascinating.
Well, if it was worth nothing, they wouldn't spend the time or the money to get there and dig it. You know what I mean?
Exactly.
So they must be in some desperate situation right now to go, what else is it? You got to be really desperate to go out there and look for a possible gold find, and which tells me again, get invested in gold. Back your 401ks. I know I say that, but when the FBI starts doing stuff like this, it just validates it more and more and more. Would you agree?
Yeah. Oh, absolutely. Yeah. I mean, I wish I had the time to be out there myself. I would love to be out there and digging and with my metal detector. So, no, I think the FBI, they must think that the source is credible for them to go out there, because I'm sure they get tips all the time. So I think probably in the next few weeks, a month, they'll probably release that something's there, and or maybe they won't. Maybe they will keep it under wraps. It's hard to know.
Awesome. Well, share any information, your concluding thoughts. Share about the book. I got a copy here of it as well. But will you share that information if anybody wants to check you out online?
Yeah. We sponsored John Williams, shadowsats.com. He wrote this ebook. Government Lies Exposed. First edition was about inflation, which people can request. Basically, in a nutshell, the inflation is much higher than what the government reports because they move the goalposts. They basically, every administration takes out energy costs and a number of different things to keep the number around 2%. If you go back to when Reagan was office in the early 80s, used the same formula, exact same formula. Last year, inflation was above 9% every single month. So these aren't numbers that we made up. These are true numbers. I think people realize that 2% is hogwash. I don't think anyone thinks inflation is 2%. So that was our first one. People liked it. And then we came out with the second one that talks about our government debt being above $100 trillion, which people can request. And that's all free information. They just call the number 877-646-5347. Obviously, they're going to mention that they heard about us on Lisa Haven, and we'd be happy to get that information out to them.
Awesome. Well, thank you again, Colin, for coming on and being available to come back on the broadcast. I truly appreciate it, and I value your information.
Thanks, Lisa. Appreciate it. Anytime.
Awesome. Well, thank you guys again for tuning into my channel. Don't forget to check all the links below. It's got all the information for you there in the description box. Well, thanks again for tuning in. I'm Lisa Haven, and that was Colin Plume with Noble Gold Investments, signing out.